Today, we're diving into one of the biggest market shifts happening right now and how you can capitalize on it. The housing market is in crisis, and mortgage rates have soared so much that the average buyer is priced out. But multifamily properties are stepping into the limelight like never before, creating what I call a gold mine for multifamily in 2025. What does this mean for you? Well, here's what I want to share with you. If you can stick around, I'm going to unpack the data that will prove to you, and with 3 simple points, why there is a multifamily gold mine happening in 2025. I'm also going to share with you the exact opportunities that the average to intermediate investor needs to look out for. This is where the money is made. And lastly, I'm going to show you how to ride the wave to build wealth with multifamily in 2025. Let's get started. We all know that the best time to have bought multifamily properties was 5 years ago. The second best time is today. I'm going to prove that to you with 3 simple points. Point number 1 is right here, the housing shortage. Okay, the housing shortage has been a persistent crisis driving multifamily demand. I see it, I experience it, so have our students. Now, what's causing this? Well, what's causing it right now is we have a huge supply and demand gap of about $3.8 million home units, meaning that there's a demand for homes. We have a certain supply. There's a 3.8 million housing unit gap there. We simply can't build homes fast enough to meet all of our demand for homes in this country. The reason why is for decades, since 2008, has been a decade of underbuilding. Okay, we can't build them fast enough, and the main reason is we have slow construction. Okay, because of rising construction costs, high interest rates, zoning restrictions, and we have land use policies that are not friendly to building things fast enough. Here's the result. Okay, here's where you come in. All right, the result is pushing people to become renters in our multifamilies, in your future multifamily properties. Okay, so this year, 2025, needs to be your year of getting in on this. All right, okay, that was point number 1. The housing crisis is huge and is not going away anytime soon. Let's go to point number 2. Got questions? Simply text the word Peter to 833-942-4516 and we'll help you. Here is point number 2. Point number 2 is high mortgage rates. And what this does, this is locking out buyers, okay, especially first-time home buyers, and is boosting renters. Here's the evidence. As you know, rates today, this month, are hovering between 6 and 7% to purchase a home, okay? And which makes homes affordable. Again, especially for the first-time home buyers. They are locked out. And what this does, this is delaying the fact, it delays buyers and delays anyone who's a first-time home buyer into buying a home. So what it does, in the interim, it shifts them into becoming a renter. So it shifts the demand into multifamily rentals. Again, I'm seeing this, right? Secondly, look at this. This is another fact. The median home price today in the U.S. is $398,000, pretty much almost close to an all-time high. The median income in this country is $97,800. But what this does is this pushes affordability to an all-time low, because making $98,000 and trying to buy a $400,000 home with today's high interest rates is not working. The numbers aren't penciling. Okay, so what this does is this is turning America into a renter nation. We are becoming, or we already are today, a renter nation. And lastly, look at this quick comparison here. So if you bought a home today for $398,000, your monthly payments for the mortgage would be, I'm averaging out about $2,100. If you bought it in 2021, the same home, the payments would be about $1,400. That's a whopping $700 a month. Okay, now, and this is the reason why, okay, listen up. This is the reason why apartments that we own, we are 98%, 92 to 100% occupied across the board on every multifamily property that we own from the East Coast to West Coast. Okay, what does that tell you? Okay, that tells you this is what's happening here, and we are literally sitting on a gold mine, and you should really consider getting in now. All right, okay, that's point number two. Let's go to my last point, which is number three. Every successful commercial real estate investor has a mentor. Get mentored by me and my team by applying to be our next protege. Click the top corner. All right, here we are. Last but not least, point number three. And point number three is the multifamily boom. And that's where the investors and the builders respond to what's happening with multifamily because of points one and two. Okay, here's a key word I want you to really hone in on right now. And that key word is absorption. Okay, absorption hit a record high, okay, last quarter and this first quarter this year. What absorption is the rate at which an available rental unit gets rented or occupied. So absorption is the ability for the market to absorb available units to decrease vacancy. So when there's an apartment unit available or something's built, absorption is the rate at which that market will take those off the market and put renters in them. Okay, that's what absorption is. Absorption is a very key number for those of us in the multifamily business. Okay, absorption hit a record high. Okay, now absorption is a direct reflection of the market health, okay, the multifamily market health and the market in which the property is located in, and also the market demand. Okay, so this absorption in Q4 of last year, it increased 13.3%, which is a record high. Okay, it's never done that before. And Q1 of this year, it increased 35%. That's also huge for what's happening right now. And there's no slowing down because the builders can't keep up fast enough. So the builders are doing their best to meet the demand, but they can't build them fast enough. Okay? And so what this resulted in is vacancy in nationwide. It fell to about 4.9% nationally. Okay? And let me break it down a little. 30 markets in the US here fell below pre-pandemic levels. That's huge. That's a wonderful trend for those of us that are already in multifamily or want to get in. And another 63 markets, they also experience some fall in vacancy. So when vacancy falls, guess what goes up? Your occupancy goes up. And right now, I can tell you, ladies and gentlemen, across the board, everything that we own, we're having no problem getting tenants put in, okay, at our current market rate. All right, now, let me ask you, here's the big question. Peter, where's the most profitable and stable opportunities now that you've shared all of this? I'll tell you what that is. The opportunity lies in not in A-class multifamily, but in B and C class multifamily. And the reason why is builders can't build brand new B and C class properties because they cost too much. They have to charge such a high rent that the B and C class tenants can afford. So the B and C class are existing multifamily, and that's the most multifamily out there today is B and C. Those are the ones that are prospering now and will prosper even in the near future. Okay, that's where the opportunities are right now. B and C class multifamily property. Got it? All right, all right. So I'm not done here. What I want to do, I gave you all this positive stuff. And what I want to do is I want to talk to the naysayers out there, the people that brings balance to our talk here. So I'm going to go over a couple of negative questions, but they're really, really important. Okay, let me do that next. Have something to share? We'd like to hear about it. Please comment below and we'll respond, including me personally. All right, here's point four. And I know I mentioned I have 3 points, but this fourth point balances out our argument, okay? Because you have to balance the positive with the negative, okay? The pros and the cons, okay? And so what I want to do with point four is ask the question, but Peter, I understand your first 3 points, and I get them, and it's true. You have all the data to back it up. But what if I just wait until interest rates come back down, and then I'll get in the market? What about that? Okay, so I have an answer for that argument, and here's the argument. Okay, first of all, I think it's a bad idea. Okay, here's the argument: when the rates do drop, okay, more money, investor money will flow into the market because multifamily is such a great thing. In fact, all the commercial real estate will see a boom. Okay, so more money will flow into the market, creating competition like you've never seen before. And do you want to deal with all that competition? Okay, all right. Number two, as the rates drop, guess what else will drop? Cap rates will drop. Okay, and when the cap rates drop, guess what goes up? The property prices and the valuations, they go up. Okay, so prices will go up. So if you wait until rates drop, guess what? You're buying at a higher value, right? So what if you were to buy now, wait until this happens, right? And then you get the experience, the prices going up. Got it? Okay. And then number three, when rates drop, more buyers will now want to sell. This is a great thing, right? Because a lot of buyers now, they're sitting on their 3 to 4% interest rate in their multifamily. They don't want to sell. They don't want to get into a 7% interest rate. I don't blame them. But when they do drop, they're going to come in the market, okay? And it's going to create a buyer frenzy. It is. I've been there, okay? Everyone's going to be busy. There'll be multiple offers. There'll be all just craziness going on in this multifamily. It'll be fun, but it won't be as much fun for people just getting into the market, okay? Especially if you don't have a mentor or coach, okay? And so lastly, this is my point, okay? Do you really want to get in then, okay, when the rates drop, and then battle multiple offer transactions or deals, and with investors with a whole lot more money than you? Okay, so when the rates drop, all this money, all the people are coming to market, right, that you've never seen before. Many of them just don't know anything about multifamily, but just because multifamily is a thing to get, they will overpay, right? They have more money than you, and they haven't done their due diligence and homework in a deal, and they're going to do crappy deals, but at least they have the property, and they took those good deals from you. Do you want to be in that situation? You don't. You don't. So I will end it with this. We all know that the best time to have bought your multifamily was 5 years ago. The second best time is today. Got it? All right. I hope you enjoyed this presentation here. If you did, go ahead and hit the like button. If you'd like to get mentored, just like many of our students from the East Coast and West Coast, a link will appear. We'll be happy to interview you and see if you're a good fit. If you just want to read something, go ahead and a link will appear. You can download our book, no obligation to you, and just get at it and read and just become more educated. Thank you everyone so much, and I'll see you at the next video.